Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September the 4th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis, and I do the same thing for you guys in these daily market commentaries, but I'm going to go a little bit further for y'all and talk about the strategies in options that I'm putting on based on those assumptions I come up with around those market analysis on the different underlyings in these stocks. I also have some guidelines for you guys to follow in order to implement any option strategy. It's not willy-nilly picking an option strategy out of a hat. I don't have a favorite option strategy. Why? Because there is a right time and place for each and every option strategy, and I go into the details of that in the webinars. I try and touch on it here in these daily market commentaries, but those webinars are an hour long, and yes, we do really drill down on the nitty-gritty on how to implement any option strategy, okay? So please check those out at protraderstrategies.com. Also follow us on Facebook at protraderstrategies.com because we're throwing out a lot of good content there for you guys to follow along. All right, so without further ado, let's get on with the economic data. Here in the United States, we've been waiting all week for the non-farm payroll numbers, and guess what? Yes, it got knocked out of the park. We came in with hourly average earnings. Now, remember, we were seeing some non-price elasticity for labor unit costs, right? We were seeing those go down in some of the previous numbers. Well, that's why we really look at this number. It is the one that is the headliner, and we got our average hourly earnings coming in at plus 0.4%, expected to be unchanged, which would have been, basically kind of flat. We're seeing some expansion there. That is good. That means people are making some money, right? Also, non-farm payroll change came in at 1,371,000 hires. That's in line with expectations. So a lot of people getting hired coming out of this pandemic. Looks like people are starting to get back to work. And the unemployment rate came in at 8.4%. So back down into single digits, which is nice, and it beat expectations of 9.8%, which would have been just below that in single digits. So really a good economic data point there. Well, why are the markets down across the board? We're seeing basically weakness in every single asset class. Well, that has to do with the fact that it does not look like we are going to get another round of stimulus. The Republicans are not wanting to bail out any of these states that were struggling before Corona and are continuing to struggle through Corona. We can't tax our way out of it. One of the ways to do would be create some stimulus packages for the retail person in order to spend that money differently. Well, it looks like most of these politicians are more concerned about election here in November and went back to their home states and are trying to get the votes, all right, rather than to get people back to work and get people spending. So it looks like we're going to have to hold on. So we're seeing some weakness here in crude oil, back below $40 right now. That's because they realize, or traders are realizing, that people aren't going to have that extra money to spend anywhere they want, and that's going to create some weakness here. It looks like you're not going to take a vacation. Manufacturing isn't going to do very well, and if we start seeing higher taxes for manufacturing and other businesses, that's going to crimp their hiring ability and everything else. So they want some people want to tax our way out of it, and that's starting to kind of filter into the markets here. That is not going to be a very good thing. Even gold coming off, well, that's because, right, we talked about this. Gold is dollar denominated. If they don't weaken the dollar with more stimulus, well, that's going to say that gold is a little overdone to the upside here. So you can see it is going back to those 2009 highs in gold right now, testing that line in the sand. Also, bonds are coming off today. Why? Because no more stimulus. It's going to basically be a weaker dollar. That means they're not going to artificially suppress interest rates. I think this is a little overdone, down almost 2 points on the day. Yes, we did have a topping pattern. It is a confirmation here back below this 176 Fibonacci, 176.20. We could call that 177. That back below that area just kind of peeled through that today. So weakness even in the bonds there. Also moving on to the other markets, we've got the VIX. It is off a little bit. And that's because we're seeing a little bit of stabilization going on right now in the equities, albeit they are down dramatically. The Dow Jones Industrial Average almost 2% off on the day, another 500 points lost in the market. Again, we're kind of seeing this correction because of weaker hands. For one, we're seeing tech, mega tech really struggle today. Another down day in Tesla and some of the other big tech names. That's going to cause the overall markets to come off. Even we're seeing this in the Dow Jones. The weaker hands, what I'm talking about is a lot of these retailers that have come into the markets and thought all you had to do was buy and the market was always going to go up. Well, those people that are trying to buy these dips today are getting slapped for that. The market's really starting to come off. I missed opportunities all day. I was chasing the market earlier on today and decided to just take my hands off the wheel and let it ride out. Haven't added anything for that. I was really trying to, though, to get in on this sell-off, but I did not want to chase it. I mean, throughout my career, I realized that when you chase a market too far, you will finally get filled, and that's going to usually be on a bounce or something like that, and I didn't want to get involved in that. I'm just going to let this all kind of filter out throughout the day. I pretty much taken everything out of my portfolio very thin on the very thin on my portfolio. I only have 3 things going on. I'll talk about those here in a minute. But NASDAQ off 3%, down quite dramatically today. Went down, and I thought we were testing that 50-day simple moving average, but just came up shy of that. E-mini S&Ps, the rest of the market, like I said, tech, seeing that whole NASDAQ thing is the leading leader to the downside because that's what's had the biggest rally, right? And those ones, like Tesla, 300 times forward earnings and all kinds of crazy ratios on some of these big tech names, that's kind of getting filtered out. That's also the ones that have the weakest hands involved in it. Like we said here, 75 points down on the day with the E-mini S&Ps. You can see overnight, we got pretty good economic data overnight, even across the pond, not some major ones to really look at. So there were some hopeful signs that we were going to get a rally. That yes, they covered. Everybody got flat coming into the non-farm payroll numbers, but you can see right here, we got the non-farm payroll number, tried to make a rally, and then boom, it was a just fall out of bed, smackdown. For the most part, we have had a green candle here, but I think that this is the buy your dips kind of people that are trying to get involved and catch a falling knife at the end of the day. I'm just going to let it all shake out. I'm going to probably take my hands off the wheel, just keep an eye on this going forward. So let's talk about BABA. Yesterday I talked about in the daily market commentary and in the webinar on selling some calls against BABA. We had that high implied volatility. We got some more spike in that volatility even today, but I was looking to sell the 345 calls in there, which gets me well up and away from where we were talking about with the short call spread that I had done and dumped out of earlier on in the week. But having said that, the market was just precipitously selling off. I tried to sell those 345 calls at like $4.35 and then chased it all the way down. Chased it all the way down. Sorry, I was looking for my trade history on this particular thing here. Canceled orders. I think they were the 345. Sorry, they were 340 calls in there that I tried to start selling at $4.35. Moved it down to like $4, all the way down to like $3.75, I think was where I just decided to pull the ripcord on it, and just canceled that order not too long ago, probably 20 minutes ago. We are starting to get a bit of a bounce here, so it might be an opportunity to get back in there. But like I said, it's going to be a game time decision on whether or not I add anything to this portfolio at this point in time. I'm pretty thin, so it's not really hurting me too bad. TLT is, still a positive trade. And if you guys remember in TLT, I bought some calls in there. And I bought the 170 calls. Got a bit of a move yesterday. Again, settled below that 200-day simple moving average. I think that there's still a possibility this could rebound. Coca-Cola is actually green on the day, and that's something I have left in my portfolio. It is overall a losing trade because I'm long at 53. A losing trade based on just that print where I had sold some puts in there, had it put to me. I have lowered my overall cost basis on that trade. So pretty thin on there. And then Seco Environmental Corp, if you guys remember, that was a $4.70 trade that I bought based on their HVAC in a sense. They compete with Carter. They're very small, or they're a much smaller company. But with this whole thing with trying to filter out coronavirus or some of these particulates from circulating through high rises, hospitals, businesses, where it will capture some of this. That is a business that I bought into for a long-term trade, and it's trading around $8.10, so it hasn't really moved. It's not going to get probably beat up in a move like this. It's just going to be where people focus on those bigger names and kind of forget about those smaller names like this one. So, and it's Seco here. As you can see, it is down on the day, but it's just an $8 stock. It's almost a penny stock, and I bought that at $4.76. It's had a nice move. It's been a place where it's almost doubled in value, so I can't be too angry with that kind of trade. And that's it. That's everything in my portfolio. Really light, as I've covered everything recently, worrying about this top that we talked about, maybe lighten up on some of these positions, add negative deltas, which I've been trying to do as we speak. So I'm just trying to stay mechanical with this trade, but I'm not going to be one to chase markets. All right, so that's it, and hopefully a little bit of words of wisdom to you guys. Don't chase anything. Wait for your opportunities. Stay mechanical. Don't get emotional. Today is probably not the day to start selling covered calls because you've already missed that opportunity, right? You should have been selling those covered calls when we talked about on those rallies with volatility and everything else. All right, so that's it. That's all I've got for you guys. One last thing is to take a moment to go over the disclaimer, and if you can't take that, have a great weekend.